Just getting the presentation loaded up. Perfect. All right, good afternoon. My name is Juan Carlos Medina, and today it will be my duty to present to you my analysis on the PayPal Holdings Incorporated company. So, a little brief intro as to what PayPal is. It has over 300 million users. It's one of the most popular firms in the world, so many people do know what it is. But for those that don't know, it's an American financial technology company that was founded in 1998, and it was founded by a group of people that later came on to be known as the PayPal Mafia. So the PayPal Mafia consisted of people like Peter Thiel, Yu Pan, Max Levchin, Ken Howry, Luke Nozick, and later the infamous Elon Musk. And how did Elon Musk actually come into become, an owner of PayPal is because PayPal back in the late 1990s, also known as Confinity, went out to merge with X.com, which was another digital transaction platform that was owned by Elon Musk at the time. So what does PayPal actually do? Well, it's a platform that's responsible for millions of online transactions every year, both mobile and uh, like via personal computer, laptop, anywhere that really has access to the internet. And it comes from both the consumer and the merchant side. And PayPal makes its money. This is very important by transaction fees. It makes 90% of its money from transaction fees. Um, and this is like, say for example, you were to send $25 to a loved one for them to enjoy a nice meal at a restaurant. And if there is an instant fee for PayPal, like an instant passing of that money, and they charge from 1 to 3%. It really depends. Um, and that's basically how they make their money. So one can infer that the more user engagement, the more transactions that occur in PayPal, the more money it makes, the higher the revenue, and higher the stock share. If it uses like logic within the fluctuations of the stock market. So later went on to become public in 2002 via IPO, and it was priced at $13 per share. Now it has over 300 million users. It employs 23,000 people. It operates in 202 markets, from e-commerce to brick and mortar stores, like e-commerce like Amazon, eBay, which does own PayPal at the moment, and you know tons Alibaba stuff like that. And it works with 25 different types of currencies, from the U.S. dollar, the Japanese yen, the Canadian dollar, the Australian dollar, the New Zealand kiwi, the British pound, the euro, the Mexican peso, etc. So on the right, you can see an evolution of the logo of PayPal, as well as an infographic on the PayPal Mafia and where they're at today and what they own and all that. So moving on to the balance sheet. As we all know, balance sheet, it's a snapshot, it's a point in time as to how the company is doing. And if you were to look at the actual balance sheet, it's pretty self-explanatory. Back then, or it could still be considered that, but PayPal was considered a really stable and bullish moving company within its revenue, within its stock price. Obviously, a lot of things changed due to the pandemic, which will be a big point in this presentation. But you can see here that there was a smooth increase in amount of total assets over the past 10 quarters, from quarter two 2018 to today. Um, and then we did get a 14.1% increase in total assets between quarter two of 2020 and quarter one. And this was mostly in current assets, such as there was more cash, more liquid assets, available to PayPal. And the bad thing about this particular balance sheet is that quarter two of 2020 also gave us a 15.9% increase of total liabilities, and it was also mainly current liabilities. Um, and I do think it's important to note that equity did not increase too drastically during the pandemic. You can see right here on the bottom right. I don't know if my picture is going to be in the way. Uh, I'll make sure to move it after. But you know, total equity from quarter one to quarter two did increase by 1,000, roughly by 1,500. But the liabilities themselves increased from 27,000 to 33,000. And of course, this is in the millions. Okay, so it's not in the thousands. So the liabilities did increase a lot. Equity did not. And an income statement, it's basically a film of how the company is doing or how the company did within that given time period. And you can see here that net revenues increased 2.3 billion dollars, or 15% in 2019 compared to 2018, and this was mainly because of 23% increase in TPV, and TPV is total product volume, um, and it's like a measurement used in PayPal to measure how many transactions or how many people are actually sending money using the app and therefore making PayPal money. So, the higher the TPV, the higher the net revenues. Uh, yeah, they work hand in hand. So the net income did increase 402 million or 20% in 2019 compared to 2018, and this was mainly because of a $502 million increase in operating income. And this year, okay, so that was from 2019 to 2018. Now we're gonna talk about the present, today, especially with this pandemic. So this year we did have a huge increase in revenue from quarter one to quarter two. It was 12.3% in a quarter, and I really want to credit this due to, we were all stuck at home. Most of us, at least we should have been stuck at home, if not at work. And we were sending a lot more money, buying a lot more things on the internet, stuff like that. But I do want to add that you also saw a huge loss in operating income the same quarter, and it was a 55% uh, increase in the loss of operating income. So that's already horrible. That's bad. But I do want to add that PayPal was being, they were being smart and they managed to mitigate that loss in quarter three from 1,005 to 996. Although it is a big number. No, it's not as bad as passing the 1,000s, and the 55% difference within quarters. But if you could see here on quarter four of 2019, um, they were already within $825 of operating income loss. And so, 996 doesn't seem too far fetched, but the fact that they managed to bring that down to 461 and then go back up and have a 55% increase of 1005 is a bad thing. But I do believe that PayPal will manage to keep mitigating the losses and hopefully, have decreased their loss of operating income. But we shall see. There are estimates on the right, and these estimates I believe to be far fetched, but that's what Bloomberg analysts believe. So going into the financial ratios, I did take the liberty of putting one table on the right, which had the last 3 years that didn't include 2020 because obviously we're not done for, and the past 3 quarters. So if we look on the right, we could see that the current ratio uh, within the last 3 years was in a range, didn't really give us a direction as to where the company was going. The quick ratio or the asset test did actually go up, so that means that PayPal would be able to pay off its current liabilities without using inventory, and I believe this is because PayPal doesn't really have inventory to start with. So yeah, it's a good thing. Accounts receivable, it did as it should. It went down. So PayPal is getting their money back quicker. So that's a good thing. Return on equity went up. Return on assets also went up, and return on capital went up. So all those three went up, which is a good thing. That means that PayPal's having better turnovers in the past 3 years, and hopefully we get to see more of that. But I do believe 2020, will be a year where we do see a decline in all ratios because if you can see on the left, all the ratios are already worse than the 20 all of 2019. So quarter four would have to have a really spectacular performance for the ratio to show an increase in the year on a yearly basis. So 2020 will have lower ratios. But if you could see here for all of 2020, the current ratio kind of stayed the same. Only thing went down, but not by much. Asset test went up as it should. Um, Accounts receivable turnover kind of just in the range. Return on equity did go up. All the returns went up, which is a good thing. That means that you can see the difference between quarter two and quarter one, and quarter three and quarter two. Just PayPal, having more of their TPV, like I mentioned before, and having returns on their equity, assets, and capital. As for accounts receivable turnover, just in the range. The rest are just in the range, but um, I do believe even with the pandemic, things are as they kind of should be. Obviously, things could be better, but what's going up, what should be going up is going up, and what should be going down is going down, which is basically accounts receivable turnover. Now, getting to the capital structure, debt distribution, and WACC. As you could see with the pie chart and the table, PayPal's capital consists of roughly 96% of its market capitalization, and zero of its capital comes from preferred equity, and that's because PayPal does not issue preferred stock because it doesn't really feel the need to, doesn't need that additional financing. It's fine with its common stock. And its debt also consists of 4.1% debt. And if we look at, this column graph of the debt distribution, I did mess up right here. All the from the 1 to 8 that meant to represent, one was 2023, 2024, 2025, 26, 27, 29, and then 7 was 2030, and 8 was 2050. So now we got out of the way, got that out of the way. 2050, PayPal has bonds that will mature in 2050 in the form of corporate bonds. So PayPal has 8 issues of corporate bonds and 6 loans, and they're all totaling up to $14 billion that PayPal has in debt. And so the blue does represent the corporate bonds, and the red represents the amount available. And this amount available is basically cash available for debt service that has not been put to use yet, but PayPal does plan to put it to use. So, as you can see here, PayPal does not really have that much debt, 4%. And I do want to add that they have very, very small short-term debt, and most of it comes from long-term debt in the form of corporate bonds, which you see will mature within the next coming years, if not all the way to 2050. And they are, callable bonds, so that means that PayPal can pull out whenever they want to, if they want to, but I think it'd be smart to just hang on until the bonds reach maturity. So moving on to the weighted average cost of capital, you see the table here. That's how the calculation was made. And it was calculated using the raw beta of PayPal, which is 1.027, which means that PayPal is a little more volatile. I don't want to say risky, more volatile than the stock market, the S&P 500, like the beta of those kind of indices. And so a WACC of 8.4% is considered good for a financial tech firm, and it's considered good for most firms too because it's low. And low WACC doesn't necessarily mean a good thing, but in this case, it means that PayPal could launch new projects for cheaper because of low WACC. And I will be talking about some projects they'll be launching later. So put it into layman's terms, PayPal pays approximately 8.4 cents to its debt and shareholders in return for $1 of extra funding, and that means that basically the debt shareholders and equity holders, whatever you want to call them, they'll be fine after PayPal makes 8.4% of its money, and everyone will be satisfied, and that's basically the minimum they have to make to turn a profit and to have their shareholders happy. So now we get to compare PayPal to its competition, and fortunately, I really wanted to compare PayPal to Skrill, which is owned by PayGrade, which will be going public very soon via SPAC from Foley Investments. But this Skrill hasn't gone public yet. They were going to last month, but they pushed it off to this month. So see if they become public soon. And I've used Skrill, so I know it's basically another online transaction platform. But better get that out of the way. I decided to compare PayPal to Square Inc., which is its number one competitor right now. And by number one, I don't mean it's the top of the industry. It's that they're really, really tight and really close together in terms of stock price and other things. I also wanted to compare it to MasterCard, which is basically the top dog of the industry. I did not want to compare it to Visa because MasterCard is already it's in-store commerce, and PayPal is online, so is Square. Fidelity Investments, I just wanted to include that one because it's more of an underdog. It's still a really good company, but to have it compared to another financial tech company, you could consider it a financial tech company, and as well as industry average. So PayPal and market cap does come in second. Mastercard's beating it, but they've been around since the '60s, so that would make sense. It's also beating the market cap by by over 200 billion, which is good. It's also beating this. PayPal's beating the stock price industry average, and Mastercard's beating it. Obviously, they've been around for longer, higher market cap, all that. But I do want to add that Square and PayPal are very, very close to each other. They're actually on a. I don't want to consider it a race, but they are in a race as to who could have higher stock price. Square, I believe, went public in 2016, so it's really, really impressive what they're doing. But moving on, as for revenue growth in 2020, PayPal beat the industry average, and you can see the Square had just an explosive growth this year, which uh, which is which is good. It's good for Square. PayPal, obviously they had their drawdown back in quarter 2, quarter 3, but I believe they'll bounce back. The price earnings ratio, PayPal is beating everyone, beating the industry average. Bloomberg did not actually include Square Inc. And when I looked it up on Yahoo Finance, it said it was around the 1500s or 1200s. And I did not believe that, so I just decided not to include it. Um, but if it were to have a price earnings ratio, I believe it'd be really solid as well. Maybe even better than PayPal's, because I feel like investors right now, they're willing to pay a lot more for Square's for $1 of Square profit, because it's new and because its stock price is exploding up. As for return on equity, PayPal's winning. Square actually had negative return on equity, which is surprising. And Mastercard had an explosive return on equity, probably because you know its company capital structure like relies heavily on equity. And as for earnings per share, PayPal had a solid. It beat the industry average, and it beat Square Inc. Mastercard was winning, but it's because it probably generated a lot more from its stock dividends and all that. But so you can see here, PayPal, if it's not first place, it's second in the industry in these things, and these are very important things to kind of like hold it up against the others, because you look at the what PayPal's worth, its stock price, how much money they made in 2020, how much compared to the previous year, how much people are willing to pay for their stock for $1 of PayPal profit, if it returns back the equity, and how much money investors are getting per share on PayPal. So I think PayPal is obviously one of the top in the industry, and it's really really close to Square Inc. Mastercard, and it's been around for longer. It's a bigger company, bigger firm, and Fidelity is more of the underdog that I just wanted to include just to have an underdog in there. But PayPal, I think they are very solid and they are doing a good job compared to most of the industry. So now I want to talk about the COVID impact on PayPal. And, just like most stocks, PayPal's price did plummet to its yearly low of $85 per share for March 23rd of 2020. And, fortunately, people started, they started noticing that the pandemic wasn't really going to affect, say PayPal, because, it's hard for a financial tech company to go bankrupt during pandemic. It's like they're one of the more essential companies, people are going to use them even more if anything. So they started utilizing PayPal for transactions related to the pandemic, say to send money to a loved one across the country, because say a funeral expense. It's sad to say, but there are a lot of cases where you had to send money to someone because they're having a funeral due to COVID. It actually happened to my family, so it's really relatable. And this plus the self-correction of the market did lead to price to go back to normal. So why did PayPal plummet that much? Probably because people were just scared. Coronavirus did impact the stock market since the start of the outbreak. You can see right there on the right, the Nikkei, which is an Asian stock exchange, the Dow Jones, and the FTSE, they all were affected. So it would be surprising for PayPal to not be affected, even by a little bit. And it wasn't affected that much either. But I feel like logic kicked in and people started realizing, oh, like PayPal's not gonna go bankrupt. So they started using more. They stopped dropping their shares, and the rest is history. I mean, people started using it even more, and it led to a higher stock price. So going on to the stock performance, I took this graph from TradingView, which is a platform for trading. It's a 2-hour candlestick chart. So every little stick here can't really see it because it's zoomed out, represents 2 hours of time, but it does manage to cover the whole year. And so you can see here, like I did mention earlier, March 23rd, the stock price did drop to $85 per share, and then it started going back up, obviously because people started utilizing PayPal more. And I do want to add that in October there was a rally right here. I don't know if my cursor is going to be able to show this. In October, from here to here, this rally was caused due to you know cryptocurrencies being implemented into PayPal's basically business plan. So in October, the CEO of PayPal, and well, basically PayPal in general, they uh, they gave the right to its 300 million users to purchase Bitcoin, Ripple, and sell them, and either for just to have or for investment purposes. But people were able to use them now, and that drive that little rally up to close to its all-time highs. But right now we are in all-time highs. And I think the stock price did reach 220 per share, so that's really impressive. And PayPal has been doing a good job to adapt to a changing economy, a changing society, and I think it will continue to do so. Now, looking to the future of PayPal, I did say right now that there was a recent implementation of buying and selling of cryptocurrencies, and that like Bitcoin and Ripple. Bitcoin's reaching all-time highs. It's also doing a really good job on its uptrend. I think it's at within 50, 60 cents per Ripple, I guess. And so I do believe that as long as cryptocurrencies go up, PayPal's price will go up too. And I do want to add, let me go back up. Square Inc. also started. It's been using cryptocurrencies for a while too, and usually when Square goes up, PayPal goes up as well, or when Square go down, PayPal goes down, and that's because they are really connected within the stock market. Analysts look at both, and they like kind of connect both, and they give ratings on both of them. They usually have the same ratings, buy and sell and stuff. And they also have a new giving platform that released, and it's basically going to be a competitor with GoFundMe. And it's called PayPal. Well, it's called a giving platform, and it's with PayPal's generosity network. So they're going to be competing with GoFundMe as well. And obviously, the the more people give on that platform, PayPal is obviously going to take a little chunk, a little fee, and its TPV will go up, its revenue go up. Hopefully, the stock price go up too. And they also acquired Honey in 2020, which is an internet browser extension application that was designed to give its consumers coupon codes. And I've used Honey before; it actually works. I recommend it, but what PayPal wants to do is they want to embed it into its actual platform. And while people are sending and making transactions using PayPal, they're also saving money using the Honey app. So this will drive people to PayPal and to start using it, get its TPV up, revenue up, you know, stock price up as well. So I do think it's one of the stronger firms of the financial tech industry, and it will most likely stay that way. And I basically explained why I believe that. Now into the recommendation. I don't want to sound too cliche. Obviously, I put it's called the Charging Bull of Wall Street into the slide, but it's because I think PayPal has a promising future. I didn't mention it has investments in cryptos, new services that are being launched. It's reached all-time highs. It reached $220 per share on December 1st, which was yesterday, and it also shows. I mean, I want to give a little warning. It's been going up, a lot. So self correction would not be abnormal to see. I would actually see a self correction happening to drive price back down around 180, 190 per share. And if that happens, I will buy because I detected the demand zone that was right there. So price were to go down there, I'll be looking to long it. And also, Bloomberg analysts, recommend a high buy. So 83.3% of analysts on Bloomberg have a buy rating, 14.6% have a hold rating, so they're already buying and they expect it to go up, which is basically like hold for a long time, it's long term, and 2.1% had a sell. And that 2.1% was one analyst from a firm called Morning Lake. So it's one person saying to sell, the rest are saying a hold or buy, and it's about 48 analysts. So 47 analysts are saying to hold or buy, one person saying to sell. Um, I don't want to take blind advice from an analyst, but because I made my own analysis, and it's adding up with theirs. I do say PayPal is a strong buy, and it should not be considered. I mean, it should be considered a strong long-term buy. A dip could be pending though, so I wouldn't say it's a short-term buy, but definitely you want to hold on to this until cryptos just become a norm in society, which it's looking like they will be. So PayPal, as long as the cryptocurrency market is up, PayPal will also go up too. And like I did mention, the only downfalls to PayPal right now is their income statement and liabilities, because their operating income had a loss and their liabilities are going up too. But we are in a pandemic. We should be forgiving of PayPal, um, and we should actually be impressed by PayPal's performance because they managed to adapt to the society. And you could tell by the revenue, by the stock prices, and by the ratios that they're actually doing a great job, especially during the pandemic. I think the pandemic fueled them to become better. Um, and the fact that they're using cryptocurrencies, it shows that they're looking into the future. They, like, say for example, Skype and Zoom. Skype, it was in the market for like what, like a decade longer or something. Zoom came in and Skype didn't adapt to the new, uh, basically, uh, online university kind of world that we're gonna live in, and so they got ate up by Zoom, and that's because they didn't look into the future. And between PayPal and Square, PayPal's still doing a good job. It's staying on track. It's thinking in the future, unlike Skype and Square. If you want to compare it to Zoom, they're just doing a great job right now. But PayPal is not letting them get in front of them, which is a good thing. It shows that they're willing to put in what it takes to basically beat Square, or do better than Square, which is, like I said, it's a good thing. So to wrap this up, I do believe PayPal is a strong buy for the long term. And yeah, thank you so much.